credit markets in Africa are still quite small by international standards. However, it is the market of all the markets in the world that are growing the most quickly, and where the profitability of credit provision is one of the second highest, most profitable credit markets in the world. Digital credit, we all see, it's growing massively. However, we started to get some questions about it as well, because a very big percentage, in fact the vast majority of digital credit seems to be going purely for consumption. So what we as FSD Africa does is we're running programs in a number of different countries, Zambia, Tanzania, Ghana, going into Sierra Leone now, which is really just trying to evaluate how big is the market, what types of credit are found, and then in particular, what are the factors that are inhibiting further growth? Which are the factors that constraining the growth? And the two big factors that really stands out is credit information sharing. Through better credit information sharing, better credit bureau activity, it is the most effective mechanism available that over the short term you can actually make an impact in the market in terms of greater availability of credit, but also better risk management by the banking sector. The other factor is a little bit more negative, if you put it like this, is better contract enforcement. I mean, the default rates that banks and non-banks in most of the African markets face are very high. Is very high write-offs, which translate into very high interest rates, and which translate into an unwillingness to do more lending. So we have to get more effective contract enforcement by the magistrates courts, quicker to enforce a contract, and enable the lender to recover their money. Then people will be willing to lend more.